Okay, welcome to a deep dive.
Great to be here.
Today, we're really getting into the source material you've shared. We want to understand the structures of globalization, specifically market integration and global corporations.
That's right. And we're sticking just to the insights from these excerpts of market integration and global corporations. Nothing else.
Exactly. So our mission is basically to unpack how markets connect across borders and how these big international businesses work using only what's in this text. Ready to jump in?
Let's do it. So this material, it starts off by defining market integration.
Okay.
It says, first, it's about how easily markets can, trade with each other. But maybe more interesting, the second part, it's also about how prices of, say, related goods or assets in different places tend to move together. Similar patterns.
Okay. So it's not just like the trade itself happening. It's that the connection gets so strong that the prices start looking alike across borders.
Precisely.
And the source breaks this down further, different types.
It does, yeah. It specifically brings up stock market integration.
Right.
That's where stock markets in, well, different countries start showing similar trends. Their movements get correlated, and the expected returns, risk-adjusted, start to align.
Okay. Correlated movements, similar returns. Got it. And then there's financial market integration. Sounds broader.
It is. It's kind of the bigger umbrella. The source describes it as basically creating an open market economy between countries.
And how does that happen, according to the text?
Well, it mentions things like having a common currency, which helps, but also, crucially, getting rid of those technical barriers, regulations, tax differences, all the stuff that stops money flowing easily.
Right. The hurdles.
Exactly. The goal, as the text puts it, is really to let capital and investment just flow freely across borders.
Okay. So the markets link up, barriers come down. Who are the main actors playing in this integrated space?
The source points to global corporations, yeah.
It does, and the definition here is pretty, well, straightforward. A global corporation is just a business operating in two or more countries. Simple as that. And being successful globally means having these multi-country operations.
But the text notes challenges too, right? Logistical, cultural hurdles are mentioned specifically.
Yeah, those come with the territory. But the upside, access to way more customers, more capital, that's the trade-off the source implies.
Assuming, of course, their business model actually works internationally.
Right. And a key driver for this expansion, according to the text, foreign direct investment, FDI.
FDI. Yeah, people often think of that as just money moving around the globe.
And this is where the source adds a really interesting layer. It says FDI is often more than just capital.
More? How so?
It frequently involves providing management expertise or technology. So it's not just cash, it's also like exporting know-how systems,
Oh, okay.
which the text says drives that extended global corporate development. It's presented as a really key mechanism.
That's a critical point, knowledge and tech moving with the money. Does the source give examples? Where does this FDI go?
It actually points specifically to the BRICS economies, Brazil, Russia, India, China, South Africa. All right, the BRICS.
As of 2011, the source flags them as being among the fastest growing emerging markets then.
And why were they attractive for companies moving in, according to this text?
Primarily, it seems, due to lower labor costs and production costs.
Okay, so cost advantages created those opportunities.
Exactly. The source also mentions a major international agreement that helps structure some of this.
Don't tell me. GATS, General Agreement on Trade and Services.
You got it, GATS. The text highlights it as the first multilateral deal focused specifically on services trade. Came into force in '95.
So that adds another dimension, right? Formal rules to help integrate trade and services, not just goods or capital.
Yeah, it shows that structural effort.
Okay, so let's quickly recap what this source material has shown us. We've seen market integration defined by trade ease and those linked price patterns. We've looked at types like stock and financial market integration, where the goal is reducing barriers. We define the global corporation operating in this space, facing challenges but seeking opportunities through multi-country presence.
Right. And FDI as a key driver, bringing not just capital, but management and tech.
With examples like the BRICS attracting investment partly due to costs, and then structures like GATS supporting services trade.
Yeah, it paints a pretty clear picture, based just on this text, of the underlying structures and forces that connect economies globally.
It really lays out the mechanics. So thinking about everything we've just pulled from this source,
Yeah.
here's something maybe for you, the listener, to think about. If market integration is pushing towards these common patterns, this free flow, what kinds of maybe inherent tensions or completely new challenges pop up when you have all these diverse cultures, different local rules, specific on-the-ground logistics involved, the very complexities that global corporations, just by operating in multiple places, have to deal with constantly.
That's a great question to ponder. How does that drive for uniformity clash with the reality of diversity on the ground? Something to think about.